Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through gold as the bearish sentiment continues. So we talked about gold last week. We were talking about the break of the 4-hour trend, and that would trigger some potential selling pressure in the price of gold, and that has continued to follow through into this week. So I want to highlight where that price could potentially head towards. Now, I've highlighted this area down here around about 1854, which is basically this previous swing high in here. So the market was making its bullish move. We can almost see the sort of pattern here where we had this kind of squeeze pattern and then price broke to the upside. So basically looking at the last sort of high before price made that move and that breakout, which is around about that 1854 level, that's where I think price is going to be heading towards, which could offer us some further short opportunities in the near term, especially on the sort of lower time frames. So looking for some further downside. Now, why are we particularly looking at gold? Well, it's all down to the Federal Reserve and the fact that the Fed want to hike interest rates by 50 basis points in May. Now, the initial run that we've seen here in gold is driven by inflation. Okay, so the inflationary pressures in the US, which are rising, has pushed the price of gold to the upside. Now, the reason why it's pushed gold to the upside is because gold prices usually rally as a hedge against inflation. Okay, so it's actually trying to hedge the rise of the inflation in the US. Now, we know inflation's been rising, so price of gold has been rising. Then comes in the Federal Reserve, and the Federal Reserve are now talking about being more aggressive with their rate hikes, and a 50 basis point rate hike is what they're looking for in May. And if that is going to happen, which is what they've said, so more than likely is what is going to happen, we often see the US dollar gain strength up until that event. So what we're seeing is dollar strength coming into the market. That's also pushing the price of gold to the downside, along with the fact that the Fed are going to hike to hike by 50 basis points. So that's pushing prices lower, so offering us short opportunities on the 4-hour trend. So you can see the 4-hour trend here. We marked out the developing trend here in the last video. We were talking about price breaking through this structure low here, making its way down, making those lower lows and lower highs. And we can see here that price has recently broken out of these 1890 lows, where we had a small pullback, price now making its way down. So a couple of different areas that I like for gold are actually a little bit higher up. So I quite like this 1920 area. You can see that price has reacted in and around this area quite a lot recently. So that area there, if price was to rally up and we get into this area and we see bearish price action, we could be looking for some ideas around that point. Alternatively, if price continues to make new lows here, we could be looking at the previous structure point for an idea short around about those levels through here. So keep an eye on gold. It's looking like the bearish sentiment is going to continue and the bearish pressures are going to continue. Looking really for price to come down towards this 1850 area, 1854s, and looking for some opportunities to see if we can get prices down to this point. So thanks for watching this video update. I hope you enjoyed it. If you did, leave the video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.